Morning, last two sessions, we had a discussion on socio-cultural environment of business. And one of the important learning outcome of this socio-cultural environment session was to do an assessment of how cultural beliefs and social norms impacts business. And we did figure out that a business organization needs to respect cultural beliefs and social norms prevalent in the country and try to align their offerings, their policies in accordance with cultural beliefs and also social norms. In addition to ensuring compliance and compatibility, business organizations also need to do an introspection as to how these cultural beliefs and social norms can be used for creating business opportunities. So, in today's class, we'll be focusing on the next component of business environment, which is economic environment. So, economic environment comprises of all the factors and forces that is responsible for the efficient functioning of an economy. And these factors and forces are being listed out here on the slide. As you can see, there are broadly five components which are part of economic environment. So we need to do a scrutiny as to how these components of economic environment, how these factors and policies of economic environment impacts business, and how a business organization should be prepared to face the issues, challenges thrown by the changes in economic environment, and how economic environment sometimes can be uh, useful in terms of generation of business opportunities. So let's first talk about the economic system. I mean, how many of you believe that there should be some mechanism and some law which prohibits especially educational institutions and healthcare organizations from charging exorbitant fees, from exploiting customers? Because of late, what has happened in the last few decades, the most profitable sectors have been those sectors which is perceived to be a sector not meant for making money. For a very long time, education sector has always been considered as an important sector for the development of human resources, and this is a sector which has always been considered as a not-for-profit sector. But things have changed now. This has turned out to be one of the profitable sectors, right? When you look at the fees charged by some of the educational institution, I'm not talking about higher education. Let's talk about kindergarten. In some of the schools in kindergarten, if you want admission in LKG, you have to end up paying 3 to 4 lakh rupees, which is quite shocking because when I recollect my educational journey, I don't think so. My parents would have spent 3 or 4 lakh rupees on my entire education, right from LKG till my higher studies. But look at the situation now. At a very early phase, just for LKG, there are educational institutions who are charging 3 to 4 lakhs, quite an exorbitant fees. So sometimes do you get thoughts that this needs to be checked, this kind of exploitation in terms of charging fees? And when we talk about healthcare, oh my God, that is of late has become a big business, right? It has become a kind of a mafia. There is a nexus between doctors, pharmaceutical companies, hospitals, and this nexus is exploiting consumers, right? You go for a hospital saying that you have a throat pain. The doctor will tell you 100 reasons why you need to be immediately hospitalized, and it's a very life-threatening problem. So that is the kind of situation that is prevalent in the country. Healthcare professionals have lost their credibility. We no longer trust healthcare professionals and these healthcare organizations. So sometimes you do get these thoughts that there has to be some regulation, right? When we look at some of the advanced countries like Canada and US, healthcare system is totally different there. Healthcare is accessible to everybody. Healthcare is free. Insurance is free. So at times you wonder, why can't we have such a system in our country where the healthcare facility is free? The answer is we do have. Government hospitals offer you healthcare facility at a very low price, affordable price. In some cases, the treatments are free, right? But obviously, you do always question the kind of quality that exists in government organizations. I mean, most of you would not have preferred to do your studies in a government school or a college because you know the kind of quality that exists there. We don't take treatments from government hospitals because we know the kind of quality that is offered. So therefore, this is what happens in case of economic system. Now, economic system asks us a basic question as to who is controlling the economic activities. Is it the government? Is it the private sector? Or is it jointly carried out by both government and private sector? So what if all the economic activities are carried out by government? If all the economic activities are carried out by the government, obviously you will get benefited because government objective is not profit making, but of the concept of welfare state. And that is what happens in case of socialism. In socialistic form of economic system, all the economic activities are carried out by the government. So you have to avail all the services, products from government organizations in case of socialism, right? In some cases, what happens in socialism, there is a scope for private sector also, but that private sector gets severely regulated by the government. The regulation is so severe that even the price cannot be decided. Let's say there is a socialism followed in a particular country where all the activities are offered by the government itself. What it means is, let's say if you want to buy a telephone, only government company is there. If you want to travel in a bus, only government. If you want to go by air, only government. If you want to travel by train, only government. If you want to buy an insurance policy, only government. You want to open a bank account, only government. You want to enroll your child for a school, only government. You want to buy groceries, only government. So government has the complete whole of all the economic activities. And as I mentioned, in some cases in socialism, we do find private sector is being allowed, but the regulatory mechanism is quite intense, which means the private sector needs clearance from the government even to decide the price. Imagine if you want to have a restaurant under socialism, there is a possibility that government might tell you that what should be the price of one plate of idli. So government may give you the limits that you cannot charge more than 10 rupees for a plate of idli. So do you want such system to exist? Sometimes we might prefer such system because, you know, at times looking at the kind of exploitation, what is happening by the private sector, right? The way they are exploiting us, we feel that yes, there has to be a government intervention, right? But unfortunately, there are other negative side of the socialism also, because wherever you find socialism, wherever you find most activities are undertaken by the government, you will find that there is high degree of corruption that is prevalent. Even though the government gives you all the services at an affordable price or at a very low price or at no price, but in order to avail them, you need to unfortunately pay bribe, corruption, right? Look at the situation what we have in India also. If you want to avail some treatment in the government hospital, if you want to get your files cleared in a government office, then obviously you have to go through serious procedures or you have to pay high amount of bribe. So that's the limitation. So the question that needs to be asked is socialism good for business? The answer is straight away no. Socialism is not good for business because the very objective of socialism is to provide services to citizens, probably free of cost, because socialism is built on a philosophy that government should act as a parent and take care of its citizens who are perceived to be children of the government. So obviously in socialism, there is little scope for business organizations to survive, to make money. So obviously this form of economic system is not suitable for business organizations. And therefore, something which is quite opposite to socialism is capitalism. So in capitalism, there is a complete freedom for private sector. The private sector by and large carries out all the economic activities. And the philosophy here in capitalism is that government perceives doing business is not its business. Right. So that's the underlying logic behind capitalism. And that's the reason government gives complete control and freedom to private sector to carry out all the economic activities. So socialism and capitalism are the true extreme sides of economic system. India has gone through a period wherein we were more inclined to socialism after independence. But over the period of time, we have changed. Probably you can ask your parents, because I remember once visiting Bangalore Telecom office. At that time, it was not even BSNL, it was Bangalore Telecom. And my father wanted to book a telephone connection for his shop. And he took me directly from the school. And I remember spending 5 to 6 hours in the queue with him. I was so frustrated. And it was such a disappointing day for me, because 5 to 6 hours in a queue was something which I wasn't expecting. So therefore, my father told me that this is the least amount of time what he has spent in the queue so far in his life for availing a government service. And he told me that in order to book a LPG connection for a gas connection, he had to wait in the queue for almost 13 to 14 hours. That was the kind of situation. So look at the problem faced by the people in socialism. Had it been capitalism, things would have been different. Now, who is running behind government telephone, right? In fact, government telephone company BSNL is on ventilator now. Anytime it can die, right? So everybody wants private sector because private sector offers you a better service, better choice, better prices. So that's the reason socialism is no longer that relevant. And India has also embraced a system which combines both socialism and capitalism. So we do follow mixed economy in which all the economic activities are jointly carried out by both private sector as well as government. And we are slowly getting inclined towards capitalism. So in mixed economy, both exist, government organizations as well as private. Now, even though we say both exist, but government has the remote control. Government decides which sector it wants to retain exclusively, which sector it wants to offer to private sector, right? So that is also there. Slowly we see government is contemplating on allowing private trains now, because earlier Indian Railways was complete monopoly under the government control, but now government is also thinking of allowing private trains, right? So India, that's the reason I said, is slowly moving towards mixed economy. But there are certain sectors government does not want private players to venture into. So such sectors are also prevalent. So in mixed economy, both exist together. But one of the interesting feature of mixed economy is that even though we say both exist, private sector is given freedom, but there is regulatory mechanism which exists, which is much stronger than that of the capitalism. In capitalism also there is a regulatory mechanism, but in mixed economy the regulatory mechanism is even more stricter, even more stronger. In India, we have this stringent regulatory mechanism which is enforced, and every industry has a regulator, and that particular industry has to adhere to the norms, guidelines, and procedures and practices which are defined by the regulator. Non-compliance will lead to cancellation of license and other sorts of prosecution. So therefore, when we look at the regulatory mechanism in India, the banking industry, the regulator, is RBI. For insurance, there is IRDI. For capital markets, there is SEBI. For telecom, there is TRAI. For movies, there is CBFC. For universities, there is UGC. For aviation, there is DGCA. On top of that, you have certain other regulatory bodies like Competition Commission of India. So there is high degree of regulatory mechanism, which is at times essential to look into the activities of private sector, because sometimes, as I mentioned, private sectors and private organization indulge in a lot of frauds and they tend to exploit the customers. So this mechanism at times really helps, but sometimes this mechanism also hinders the growth of the business. So it has both side of the story. Even though we have a lot of regulatory mechanisms in place, but you know that every now and then there is some sort of a fraud that happens. Even though our banking regulatory mechanism is quite strong in comparison with some of the other countries. But what is the use? Despite of having such a strong regulatory mechanism, how many banking frauds we have seen in the last 2, 3 years, right? And recently, NSE fraud is NSE fraud has come into the limelight. That has been in the headlines for the last few days, despite SEBI being in place. So yes, even though these regulatory bodies do exist, sometimes their credibility and then their way of working also is being subject to a lot of criticism and questions. So this is how economic activities are carried out. And business organization obviously do not prefer socialism, because socialism, there is no scope for them to grow, flourish, and to make money. The other two form of economic systems are very much preferred by the business organization, especially capitalism. Now let us also do an introspection as to how some of these major rates like inflation, interest rates, forex rates have impact on the growth and development of business, and how do these rates also affect the decision making in the business organizations. First, let's talk about inflation, because inflation is something which most of us are familiar with, and at times we are also victims of inflation. Inflation has a very serious impact on our day-to-day life. Inflation is a tendency where the prices of goods and services goes up and the value of money declines. And the effect of inflation is simple: your purchasing power reduces, which means if you are spending 10,000 rupees to manage your household, if you're spending 10,000 rupees to manage your expenses, now with that same 10,000, you will not be able to manage your family because of inflation. So when prices of agricultural commodities, when prices of fuel, rent, school fees, everything shoots up, obviously it is an indication that you will not be able to manage your family in the income what you are earning. So let's say earlier you used to manage your family in 10,000 expenses. Now on account of inflation, you are not able to do so. You need in fact 13,000. So you need additional 3,000 rupees more because the inflation rate is on the higher side. So where will you get that 3,000 rupees as an individual? So as an individual, obviously you want to strive, you want to do some additional work, provided if it is available. Otherwise, what happens? Some people also indulge in borrowing money. So in order to meet that extra 3,000, they take loan, and in order to pay that loan, they'll take another loan. So in this way, they get into a debt trap. So what are the possible solutions available for an individual household to manage inflation? How can an individual tackle inflation? As I mentioned, either you need to work extra. Option number two, taking loans, which seems to be a very bad decision. Third option is something which most of the households in India do follow. And what is this third option? Third option is to rework your budget and cut down on the expenses. So as an individual, our needs are broadly classified into three categories. We have necessities, we have comforts, we have luxuries. So in order to manage our expenses, obviously there's no question of targeting necessities. And for a common man, luxury is a very distant goal. So that is not at all possible. But yes, comforts and necessities is something which a common man can work out on and manage his expenses. Necessities we can't compromise. Just because the prices have gone up and you don't have money, you cannot say your family members that you have to brush your teeth only once in a week, you need to take bath once in a month, you have to eat one meal a day. So necessities can't be compromised, because in case if you compromise necessities, it will have serious health and lifestyle repercussions. So therefore, what needs to be targeted are the comforts. Now, what do you do for comfort as an individual? What makes you comfortable? What gives you that sense of uh, comfortness? So a lot of us do certain things on Sunday, especially on holidays. We want entertainment that makes us comfortable. So for which we go to cinema theaters, we watch movies, something which an average common man does in India. And in addition to going for movies, a lot of us also have this tendency of eating outside on Sunday. So Sunday generally we find most of the restaurants crowded. In fact, breakfast is also not prepared, because in India, we follow this tendency of doing a kitchen band on Sunday, because breakfast comes from a nearby Darshini hotel. Lunch will happen somewhere outside. right? Probably you would want to eat outside lunch or dinner with your family. And even, cinema theaters are also houseful. Even the worst movie with terribly bad reviews also will be running full house. And then, of course, one of the other thing which is also done is shopping. So these are the three things which an average common man does, and through these things he gains that sense of satisfaction and comfortness. So obviously you cannot target the necessities, but comfort is something which definitely you have to target and cut down your expenses to cope up with inflation. Now, in the process of doing this, there are serious implications, not for you, but for the business. Imagine if you're not going to cinema theaters, what would happen to cinema theaters? I mean, cinema theaters had tough time in the last 2 to 3 years because of pandemic, right? But imagine if people are not going, what will happen to a cinema theater owner? His business, his sales would be badly affected. What happens if you're not going to a restaurant? What happens if you're not shopping outside? So because you're not shopping outside, you're not going for entertainment, you're not eating food outside, how will this impact the business organizations? The answer is simple. Business organizations' sales would be severely affected. Now, the question is, when your sales are getting declined as a business, how will you manage your expenses? Because you need to maintain a minimum amount of sales to meet your expenses. If the level of sales decline, then you will be end up landing in a situation where your sales are less, but expenses are on the higher side, which means that you will start suffering losses and you will no longer be profitable. So, as a business organization, how will you address this issue? Because I did tell you, an individual has three options. Option number one, do some extra job. Option number two is to borrow loans. Option number three is to cut down the expenses. Now, the same strategy is something which a business organization would also probably have to apply. Of course, the first one wouldn't work out because the business organization cannot operate for extra hours when there is absolutely no sales. So it doesn't make sense expanding your business hours in the event when there are absolutely no sales coming out. So only two options are left. Either take loans, and at one point in time, your loans will be piled up. So you have no option. So if you're an individual who is of very good value system, you will probably commit suicide because you are no longer in a position to repay all those loans. But if you are a person who is of unethical values like Vijay Mallya, then probably you will also run out of India, right? You will also elope somewhere. So therefore, business organizations also have two options, either to borrow loans to meet their needs, to meet their expenses, or the second option, which seems to be viable even for business, cut down the expenses. What is the major expense for any business? The major expense for any business, and this is what most of the business organizations do, the moment their sales are compromised, the moment the sales seems declining, first thing they do is they cut down the cost. And in order to cut down the cost, the first set of people who are targeted are the employees, because employees are a major cost for any business organization. And obviously layoffs will start, business will start firing employees. This is something which you all have gone through. You all have seen sometimes what happens if the businesses don't do well. In companies also, first they'll tell you that the business or the process is getting shut, so you're benched. And in case if there is any job, you would be offered. Otherwise, you will be asked to leave the organization. The same thing happens here also. So business organizations, in order to remain in the business, they remove employees. So that's the first step towards cost cutting. But still, if things don't work, if things are getting worse, then obviously there is no option left but to shut down the business itself. Now, just imagine where the things are getting directed, right? First, because of high inflation, common man got affected. Because common man got affected, the entire business is getting affected. Now, because the business has got affected, what is the impact now? What is the impact of these two events? The impact of these two events will be on the economy, will be on the government budget, because government also needs money to run country. And one of the major source of revenue for any government in the world is taxes. And what will happen to tax revenue? When a person has to pay tax, when the person is employed or when the person is unemployed. Since businesses are not doing well, they are firing employees. That means it is resulting in mass unemployment. Obviously, it means people don't have job. So when people don't have job, that means they don't have to pay income tax because they're not earning anything. And it's the same thing with business organizations. Business organizations are no longer profitable. And of course, they're also not paying any tax. So government's tax revenue is now getting dented. So government, when there is completely, when the tax revenue gets severely affected, how the government will manage the budget now? Because government cannot follow the strategies followed by common man and business. Government cannot cut down on the expenses. One of the major expense for any, I wouldn't say any government, but especially a country like India, is national security. Majority of the revenue gets spent on maintenance of army and other armed forces. So therefore, government cannot say cost cutting. Government has to follow the option number one, that is borrow loans from international institutions and neighboring countries, your partners, and somehow manage. So this entire circus, this entire drama, what I narrated, leads to inflation. So inflation leads to recession. Inflation is one of the factor that is responsible for recession. Recession is a situation where all the economic activities have slowed down. Government has high amount of fiscal deficit. Government does not have sufficient revenue to manage its expenditure. So physical deficit is on a very higher side. So you saw the implications of inflation, and that's the reason government gets fever immediately when the inflation runs into double digit. Somehow government has to come up with initiatives to control inflation. Otherwise, the economy will go into a wrong direction. Now, what about interest rates? What's the correlation between interest rates and performance of the business? Interest rates impact performance of the business in two ways. First, businesses heavily depend on external borrowings to meet their expenses for working capital, and funds are also required for expansion, growth, diversification. But in case if the rate of interest is on a very higher side, businesses do abstain from going for loans. As a result of this, they are not able to expand, they are not able to diversify. So the growth and expansion of business is being hindered by high interest rates. Now, what is the other side? The other side is from the point of view of a consumer. All of you are aware that most of the things what we buy online, given the kind of liberal credit facilities which are available in the market, we buy things on EMI and we pay interest and we pay back the amount of money what we have borrowed to buy the goods. But if the rate of interest is very high, again, consumption gets impacted. If the rate of interest will high, definitely you will not buy a mobile phone, you will not buy washing machine, you will not buy refrigerator, you will not buy inverter, you will not buy air conditioner, right? Because most of the things what we have in our house, one or the other is being procured through an EMI. And we will obviously avoid buying when the rate of interests are very high, right? One of the reasons why the growth of e-commerce is tremendous, because e-commerce platform offers you seamless credit facilities, and that too at convenience. At few touches of a taps or buttons on your mobile phone, you can avail credit. Options like buy now, pay later, and emergence of fintech companies has also played an instrumental role in providing credit facilities. These fintech companies they collaborate with traditional banking system, and they offer customers seamless experience in availing loans to buy things of their choice. So in the event where the rate of interests are exorbitant on a higher side, individuals, consumers will also refrain from buying goods on EMI, on loan. So again, this will lead to reduced consumption, which means the sales of business is getting affected. When sales are getting affected, the profitability gets affected. When profitability gets affected, the growth of business is being hindered again. So this is how all this is correlated and connected with each other. Forex rates depends whether you are an importer, whether you are an exporter. In case if you are an importer, obviously you want Indian rupee to be stronger than the foreign currency. But in case if Indian rupee is weak, then you have to spend more money in buying that foreign currency, and as a result of this, your costs would shoot up. And when your pricing is on a very higher side, it will lead to lower consumption, which means low sales. But in case if you are an exporter, you want Indian currency to be weak because you get more money when you convert that foreign currency into Indian rupees. So it depends. So forex rates also have implications on your profitability. Business cycle is an outcome of all this. Inflation, interest, what that creates business cycle. So when inflation is on the lower side, when interest rates are very less, when there is high employment, what will happen is it will result in boom. That means there will be more and more consumption. More consumption means higher GDP. Higher GDP means the economy is going through a seamless phase where there is a prosperity. But in case of high inflation and high interest rates, high unemployment, the economy will be put into the direction of recession. So all these are impact of your major rates. Economic growth rate, this is one of the best way to measure the health of the economy, is the GDP. Higher GDP indicates higher consumption, higher production. Lower GDP indicates lower consumption and lower production. Per capita income is also an important factor to judge the prosperity of an individual and the economy. And some of the major policies also have severe impact on the business. And these policies includes your policy pertaining to taxation. Policy pertaining to taxation is called fiscal policy. Now you might have come across various taxes, customs duty, excise duty, sales tax, value added tax, entertainment tax, service tax, luxury tax, commercial taxes, income tax, gift tax, capital gain tax, property tax. But all these taxes can be broadly classified into two categories: direct taxes and indirect taxes. Direct taxes are those taxes which you end up paying when you earn. Indirect taxes are those taxes which you end up paying when you spend. So GST is an example of indirect tax. And what you pay on your salary is an example of direct tax. So income tax is a direct tax because you pay that on your earnings. So GST is an indirect tax because you pay that on whenever you spend money. So how does these tax rates impact business performance? The answer is a direct correlation. GST is a very important indicator, and GST is very important to drive the sales and performance of business. In fact, most of the economists are of the opinion that there are three forces that have destroyed Indian economy in the last few years. One is demonetization. The second one is the way in which GST was implemented and rolled out. And the third one is, of course, pandemic. So these are called the three major forces which has completely bombarded Indian economy. Now, demonetization, let's keep it aside. We all know how disastrous it was. Let's talk about GST. Now, GST was there as a policy in the pipeline for a very long time. But the manner in which it was executed, implemented, had serious administrative issues, tech issues, and most importantly, the rates were not rationally designed. One of the major industries that took a blow because of implementation of GST was the hotel and hospitality industry, because the GST rate was 18%. Imagine you have gone with your family to eat in a restaurant. The bill is 1,000 rupees, on which 180 rupees is the GST. As an individual, as a common man, you'd be wondering 180 rupees probably would have eaten another plate of biryani in that. Right. So therefore, 180 or the 18% rate is something which killed the hotel and hospitality industry. But by the time the government could realize it was too late, the damage was already done. But at a later stage, it was reduced to 5%. But look at how damaging these tax rates can be. It has to be rationally done. If you want to promote economic development and if you want to stabilize certain industry types, tax policy is very important. In fact, in the month of December, just 2 months back, Government of India had decided to increase GST on clothing to 18%. I mean, already the textile industry, the clothing industry, the retailers are under severe pressure recovering from the financial shocks given by the pandemic. I mean, how many of you bought clothes in the last 3 years? Because we are not moving out of home only. We are sitting at home and doing all our work. So clothing industry was badly affected and government wanted to completely kill it by increasing the GST to 18%. But because of strong opposition, because of a lot of pressure from the industry, government decided to put a hold on that decision. But I don't know, it probably might get implemented very soon. So that's what the tax rates can do. This is an example of indirect tax. What about direct tax, income tax? How many of you are very pleased with the income tax rates, which remains unchanged for the last few years? And this budget has also disappointed all those people who are earning income from salary because there is absolutely no tax relief. Government seems to be not very much concerned and bothered about individual taxpayer, but rather more concerned about the corporates because corporate got the tax benefit and leverages in the recent budget, and what common man got was nothing but a quote from Mahabharata. That's it, right? So therefore, these fiscal policy can impact, even though corporate tax rate might help business. But what about GST and personal income tax? Because when you are paying a lot of money on tax, I mean, you're not saving much. And when you're not saving much of the money, then how will you spend that money? Because tax system should drive consumption. Only then businesses will flourish. But unfortunately, there was no change in personal income tax, and GST is also posing threat to business organization for their growth and expansion. So that seems to be the story at the moment. So therefore, fiscal policy also is important for the well-being of the business. Monetary policy is again a policy that deals with circular flow of money in the economy. So inflation is again interest rate is a part of the monetary policy. So let's not do a more discussion on that. So interest rate is again part of the monetary policy, which we have already discussed. And then comes your foreign policy. So in foreign policy, basically, we see how good the foreign relationship of our government with the other countries and how welcoming is the government in terms of allowing foreign direct investment. Do we promote foreign investment, or are we a country which is quite conservative about foreign investment and want to promote only the domestic industry? Or are we a country wherein we want foreign companies to come in, but when they come in, we put a lot of restrictions on them, we charge high taxes. So all sorts of things happens in different countries in the world. And unfortunately, last few years across the globe, countries have slowly started embracing protectionism, wherein they are giving more benefits to the domestic industry rather than promoting foreign investment. So that also needs to be introspected, because if you are a country which is favoring more of domestic business, then yes, of course, as a domestic company, you might reap benefits. But if you're an MNC, then you will get affected. Your business prospects might get affected. So these are the different forces and factors which are part of the economic environment and its impact on the business. Let's see some statistics now. Some of the interesting data which I wanted to share with you is one is the tax rates. So these are some of the countries which have highest tax rates in the world in terms of personal income tax rate. Whereas in India, we follow a progressive tax system where our tax rate is not flat, but we follow a slab system in which the tax rates are different depending on your income earning capacity. But there are countries in which the tax rates are very high and flat, and it is justified because most of these countries are rich countries. So obviously, when you have more citizens who are rich, you can charge high taxes. And in terms of corporate taxes, tax which companies have to pay on their income, India is turning out to be a country which is offering a very affordable tax rate at 25% at the moment on companies. In terms of savings, these are the countries which saves a lot of money, that people save a lot of money. So we don't find ourselves here, but we are in number 23rd position in terms of savings. So this is the picture of the economic environment which I wanted to share with you in today's session.